Hi traders, have you ever entered a breakout trade feeling confident only to watch the price suddenly reverse and hit your stop loss? Well, that is called a false breakout. All right, and it is one of the most common ways that traders get trapped in the markets. So in this video, I'm going to break down why false breakouts happen, how market makers use them to manipulate price, and most importantly, how you can avoid them using a secret trading technique. So make sure you watch this video till the end because I'll be sharing a powerful strategy to filter out fake breakouts and increase your trade accuracy. Hit that like button and subscribe for more trading content, okay? Let us get started. Now, a false breakout occurs when price breaks above a resistance or below a support, making it look like a strong move. Okay, let's look for a very good example. Okay, so we can see what happened here. You can see that we had a support zone around here, right? We had a support zone around here, and then you can see that we had a breakout to the downside, but this breakout was very short-lived. This breakout was short-lived. Shortly afterwards, we can see that the price reversed back in the opposite direction and we had a significant uptrend. Okay, now let's even look for another example where the reversal was so swift. Yeah, because there are some examples where the reversal is going to be really swift, right? Okay, all right, you can see what happened here. Can you see that we had a resistance around here, right? And you can see that there was a false breakout. The price broke above this resistance, but very shortly afterwards, you can see how we reversed back significantly. Can you see that? So this is what we call a false breakout. Now, this happens because smart money, like banks, institutions, and big traders, they use false breakouts to trap retail traders and grab liquidity before moving the market in the real direction. So here's how it works. Retail traders see a breakout and jump in. Market makers push price slightly higher or lower to trigger stop orders. Once liquidity is grabbed, price reverses, leaving traders stuck in bad positions. Now, if you've ever had your stop loss taken out before price moved in your favor, this is why, okay? So false breakouts are not random. They occur because of liquidity hunts or retail trader traps or fake momentum. Now, in terms of liquidity hunts, large institutions need to fill big orders, so they push price to trigger stop losses before moving in the real direction. And then, in terms of retail trader traps, many traders buy breakouts too early without confirmation, making them easy targets. And then finally, with respect to fake momentum, sometimes a breakout happens without enough volume, leading to a quick reversal. That is the reason why it's important to check your volumes, okay? So now let us talk about how you can avoid these traps and enter only high probability breakouts. To avoid false breakouts, never enter a breakout trade blindly, okay? Use these three confirmations before placing a trade. The first is to wait for a retest, all right? If you have a breakout, ensure that you have a retest of that breakout point, all right, and then there should be a rejection and then continuation in the direction of the breakout. So when you get your continuation, you can enter in the direction of that breakout. So do not just jump in after the breakout happens. Ensure that you have a retest and a continuation. All right, a true breakout will usually pull back to the support or resistance level before continuing in the breakout direction. So if the retest holds and form a bullish, for example, this is a bullish breakout. If the retest hold and form a bullish candlestick confirmation, that is your entry signal. If it was a bearish breakout, if it was a false bearish breakout that happened, you have to wait for a retest and then the formation of a bearish candlestick confirmation. All right, you have to wait for a retest and the formation of a bearish candlestick confirmation before you enter the trade. All right, and also check your volumes. All right, you can check volumes and momentum. Okay, you can use the volume indicator. A real breakout happens with increased volume. All right, so watch out for increased volume. If there was no increased volume, it might be a false breakout. Okay, now also look for momentum candles, right? You could be watching out for, large, strong candles that show real buying or selling pressure. Weak or small candles indicates uncertainty. Okay, and finally, use key indicators. You can combine, several indicators. For example, you can use the RSI, combine it with the volumes indicator. You can add the moving averages to it, just to confirm, signals. All right, to confirm your momentum. Okay, a breakout with overbought RSI might be a trap, while a breakout with maybe bullish MACD divergence has higher chances of success. All right, so it is very important. It's very important to pay attention of all those. Now, let's just look at an example, a very brief example. Okay, so now we are on the we are on the USD CHF, right, on the 4 hours chart, and then we can see that the price broke above this resistance level. Okay, making it look like a strong bullish move, but there is low volume. Can you see? Do you see that this was the time that the breakout happened? Just watch closely. Can you see? Look down, look down, look down, look down, look down, look down. You can see that there was actually a low volume at the time of that breakout. Can you see? There was a low volume. Now, there was no strong momentum candle, right? So it's a red flag. So instead of entering, we wait for a retest. And guess what? The price drops back below resistance, trapping buyers. So this confirms it was a false breakout. By waiting, we avoid a bad trade. So this technique works across Forex, stocks, and crypto. Okay, any market with price action. Now, let's talk about, the final tips, just some final tips and takeaways. Okay, patience is key. All right, very important. Do not rush into breakouts. Wait for confirmations, okay? And then always use multiple confluences. Watch out for your volumes, your retests. Ensure that you have your volumes, your high volumes, get your retests right, and then your momentum should also align. Both your volume, retest, and momentum should align. They should all align, okay, in the direction of the breakout, okay? And then always manage your risk. Even strong setups can fail, so always use a stop loss. All right, avoiding false breakouts will save you from unnecessary losses and help you trade smarter. All right, so that is it. Now you know how to avoid false breakout using a secret trading technique. If you found this helpful, hit that like button and subscribe for more trading strategies. Let me know in the comments, have false breakouts ever trapped you before? I'd love to hear your thoughts. In the meantime, thank you for watching, and I'll see you in the next video.